Welcome to Ultima Markets. Today, we're diving into Australia's big monetary policy question. Should the Reserve Bank of Australia hold steady or cut interest rates? Let's break it down. In September 2025, the RBA kept the official cash rate at 3.6%. This was due to strong economic signals, persistent inflation, and a recovering housing market. Despite 3 rate cuts earlier this year, the RBA is cautious, waiting for their full impact to kick in. Australia's economy shows resilience. GDP grew 0.6% in the June quarter, pushing annual growth to 1.8%, beating expectations. However, inflation remains a concern, hitting 3.0% in August, the highest in over a year. This surge is largely driven by a 24.6% increase in electricity prices as government rebates fade. Housing costs also contribute to inflation, with that sector jumping to 4.5%, impacting household budgets. The manufacturing sector is growing but slowing. The S&P Global Manufacturing PMI fell to 51.4 in September, indicating weaker new orders and fading business confidence. Yet, companies are still actively hiring to manage existing workloads, pointing to a persistently tight labor market despite the manufacturing slowdown. Globally, the U.S. Federal Reserve cut rates to 4.25% in September, signaling more cuts are likely ahead. This could pressure the Australian dollar and raise import costs, adding to Australia's inflation challenges. However, Australia's strong economy provides the RBA with room to maintain its independent policy stance, even amidst global pressures for rate cuts. Governor Michelle Bullock described the current policy as a little bit restrictive, suggesting a careful balancing act. Looking ahead, a rate hold at 3.6% in November is highly probable. This is driven by solid GDP growth, a tight labor market, and inflation above current forecasts. These domestic factors collectively outweigh any global pressures for immediate rate cuts, reinforcing the RBA's cautious approach. The upcoming Q3 CPI data will be crucial. If inflation spikes again, we should not expect any rate cuts until well into 2026. For borrowers, this means higher repayments for now, but it could ultimately stabilize the housing market and prevent overheating, ensuring long-term sustainability. The RBA's primary focus remains on keeping inflation in check while supporting job growth. Stay tuned for more updates on Australia's economic journey. This video is for general information only and does not constitute investment advice. Visit Ultima Markets for more detail. Thanks for watching. Subscribe for more economic insights.